headline print came in accelerating from 3.2% to 3.7% on a year-over-year basis. Also came in a little ahead of expectations, which were 3.6. On a core basis, it was 4.3. That was down from 4.7 the previous month, and also in line with expectations for 4.3. There was acceleration on a month over month in the core. It accelerated from 0.2 to 0.3. So that also happened in the headline number. So those were sort of the negative surprises. If we think about this sort of path we've been on here, you've essentially had for the last 2 months now a dynamic where the base effects, the tier comparative base effects, went from steepening dramatically through June to easing, not immaterially, both for July and August. So unsurprisingly, we've seen the reacceleration in inflation. The number here looking ahead is basically set up for a flat comp this next month. So the September base effect is flat. And then the October base effect is actually going to re-steepen a bit by around 19 basis points. And then in the final 2 months of the year, November and December, maybe getting out ahead a bit here, but the November comps are flat, and then the December comps ease by 21 basis points. So the way I've been sort of characterizing this or trying to is that, you had that, one-way train basically through the first half of the year from a base effect standpoint, just, steepening and then dramatically steepening through the second quarter. The third quarter was an environment of basically total reversal, where you went from not only not steepening, but to in fact easing, and doing so, like I said, by not an immaterial amount. And then these next 4 prints are largely going to be this sort of sideways chop, just from a base effect standpoint. So steeper by roughly 20, and then, flat, then steeper by 20, then flat, then easier by 20. On the energy side, which is the other sort of important lens here, energy's 2-year base effects eased very meaningfully in July. That was obviously manifest. We saw the acceleration in the August print, which went from being down 12.5% year over year in July to down 3.5% or 3.6% in August. Those base effects are going to continue to ease significantly in August. That'll manifest in the September number, and the September base effects are going to ease further. This is for energy, and so that is likely to keep the pressure to the upside in the October report. Obviously, we continue to see energy prices bullish trend and rising. And we're not going to see a steepening in those energy base effects until we get the October number. And that's going to, of course, not be released until November. And that'll just be for a single month before those base effects then again resume their easing dynamics. So that's largely the sort of setup from a base effect and comparative standpoint.
Important point to make here is, and if you just take like what Powell said at, when he raised rates last time in his press conference, he said, look, we're data dependent. We have 2 more inflation reports. We'll take the data and we'll make a decision on September. If you are not full of shit and you're looking at what Steiner just rattled off, and for that matter, last month, you would be raising rates next week. They got all the way down to 6 or 7% chance of a Fed hike on September, I think last week, right? Do you know if they've moved up or down?
It's lower. It's the current expectation is just 3% for a Fed hike. 97% that they'll stay unchanged.
I mean, what the fuck, Powell? Like, you're full of shit or what?
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.